Hi everyone, Adam Harris here. It is Sunday the 13th of December. We're very close to Christmas, so I hope for all the guys out there, I hope you started your Christmas shopping. I mean, remember, we now only have, well, I guess if we get started on the afternoon of the 24th, we've only really got about 5 or 6 hours to do our Christmas shopping. And so just make sure that you've started writing down what it is you're actually going to buy now. So I'm having a look at the major currencies. I'm going to have a look at what's expected in terms of economic calendar news this week. And so really what I'm going to be focusing on, if I'm just having a look at what's listed here, I note, for example, that we've got OPEC meetings in, which could potentially impact oils. I also note that we do have FOMC, in terms of FOMC statement. We also have a monetary policy summary from the UK. On Thursday, so Wednesday, we've effectively got US economic or monetary policy, and on Thursday we've then got UK monetary policy, so I'll be watching that. And then of course on Friday we've got out of Japan, we've got monetary policy as well. So those are potentially volatile situations because of what is the concern with regards to the economies in those particular cases, and do they feel they need to adjust or tweak the interest rates in order to stimulate or curb the economy. And so that's certainly going to be something that I need to be aware of and be cautious around. In terms of European news on coming out of Wednesday, so there's nothing really officially on Monday and Tuesday. That doesn't mean that the markets won't move. Please understand that right now the trend, for example, the US dollar is to weaken, at least I would expect certainly until it hits 90, then we'll see once it breaks through 90 where it's going to go from there. So the markets will continue to move, but what might add additional volatility or any kind of uncertainty into the markets would potentially be one of these items here. And I'm focusing predominantly on the high impact economic calendar news. So really just noting those and potentially coming out of the US, retail sales might be worth paying attention to, and PMI flash manufacturing. And that's really it. So I think at this point what I'm going to do is go across to the charts, and let's have a look and see what the charts are telling us, and then see how this could potentially play into that. Okay, so starting off with the US dollar index, as I said, my expectation is largely that it will continue to head lower until 90 continue to weaken. I was and continually am wary or waiting on a potential retracement back up in towards 91, 92 in order to allow it to continue further down. But actually looking at price action as it is now, I'd be perfectly happy with that to continue down to 90. I don't think it would be ridiculously overextended at that point, or at least it would be closer to that, and on a monthly basis it would be fine. So my initial approach, plan A, in the markets this week is going to be looking to see if there is a weakening of the US dollar. My issue really came when I look at the majors, when I look at Euro US dollar. I really didn't feel that we've had a deep enough retracement, ideally, but we did meet the minimum requirements. So I discussed this last week. I was kind of saying we pulled into the 10 moving average. This is one of the original. We were saying it would either, or at least I was saying it would either pull back into the initial moving averages or pull back down to this key level 1.2, which would be more kind of ideal. But even, you know what, last time around I was saying it'd be nice to see it pull back to 1.15, and it didn't do that either. It's not to say that it won't at some point in the future, but for now, I guess if it wants to break through this resistance level, this band that I've highlighted in blue, and continue on upwards, that would make sense in line with a weaker US dollar. At the same time, until we kind of get through that band, which will give us some room to run up to 1.23, which would be the dollar weakening down towards $90, I'm still prepared for it to potentially fail, come back and test this 1.2, then potentially resume and then head up towards 1.23. So it didn't happen last week, may happen this week, and I want to be prepared for that. But in every other respect, I'm still of the opinion, or at least I stand by my assessment, that I expect the US dollar to weaken. So having a look here at sterling. Sterling is now completed, or at least is now, in my opinion, back into this really nice area, potentially as a weekly retracement. We are, just about midway through the month. That could be a kind of a range indecision or bearish candle setting up, which could imply that if it stays this way towards the end of the month, this could be a setup for it to continue to head lower. However, this week I'm going to be looking for signs to see sterling turn around. Either if it just finishes with a nice small indecision bullish candle, but something that indicates potentially the weekly is now ready to resume up, which again, if it does form that, the implication could be that again this week maybe we don't get much happening, and then it produces an indecision candle. So this is one potential outcome, and then turns around next week and does the move, or ideally this week it actually starts to turn around and does a bit of a bullish candle and provides by the end of the week a bit of a move to the upside, supporting the idea of a weaker US dollar. Australian dollar, US dollar carried on this week. I have to say, looking at Aussie dollar, Kiwi dollar and sterling, I think they're really going to be the magic ones this week. I think providing the best opportunities. I'll show you in a moment which charts I'm thinking of. We've got a really nice uptrend, confirmed uptrend on the monthly on Aussie dollar, with the next key target being at 77.50. That's 0.7750. Potential bearish candle over here, but actually I don't think, I mean, any kind of a retracement here again for me doesn't really necessarily change the overall direction. I think we've got enough room to continue up to the upside, and so I'll be looking for pullbacks on the daily for swing trading opportunities, or maybe on the 4-hourly for those entry opportunities into the trend to the upside. But for the most part, that indicates that potential for a weakening US dollar as well. The New Zealand dollar, US dollar is struggling, certainly with 0.71 as a daily resistance level at this point in time. It's a little bit overextended on the weekly. It's still hovering around this weekly resistance at 0.7050. And that monthly, of course, is pretty much free, in my opinion, to go head up towards 0.73. That's kind of its next, I think, on a monthly basis. I think if it had to push its way up to there on the monthly basis, that would be acceptable. It's not that far even on the weekly. It could potentially overdo that. Do that. And so, again, we could get that weaker US dollar would tick all the boxes and complete all of these things, providing the opportunity to do that. So, looking at this a little bit more closely, of course, that Australian dollar, if we just go back to this, there was a potential here for this to, if that is a bearish candle, we break the low of that, price could pull back here temporarily. We could see a similar thing with Kiwi dollar potentially coming back down into this area if that's going to be the case. Conversely, if we get a really nice drop in the US dollar, we're going to see that it's going to continue to push up higher. Looking at dollar yen. So dollar yen, and this might be a controversial statement to make, dollar yen, in my opinion, is junk to trade, and I think that anybody who feels that dollar yen regularly provides money-making opportunities for discretionary trading is talking out their ass. I really don't see that on a regular basis. I think dollar yen should be left well alone for now by discretionary traders. For algos, it's fantastic because they trade noise really well, but for human beings, it's a really bad idea. And even from an investment perspective, I think it's a very bad idea. And that is my opinion, of course. It's just my 2 cents worth as an analyst. I really don't think it's that great, but a lot of people seem to like it. Look, it's still eking its way below 104.50 towards 101. But in terms of trading opportunities, it's just a mess. So I would pass on it because there's so many other things that are a lot better out there. Dollar Swissy. Again, beautifully breaking through that 0.9 level, heading on down to 0.87, and so there's some potential for that to continue down. Again, any pullbacks into the moving averages for me, or back into these levels, or back into Fibonacci levels as well, any kind of clusters of those would provide shorting opportunities to the downside. So I'm still, again, leaning towards a weaker US dollar and these trends to maintain. Currencies don't always do that, but we've been cooped up for a while, and finally the currencies are kind of breaking free, and there is as good a possibility that they'll continue as there is that they could just suddenly change their mind, which isn't always the case. Dollar CAD as well. Again, I highlighted this area in blue because it was becoming overextended, and I'd like to see a break to have it retrace again back up to test this area for resistance, providing some shorter term intraday opportunities on the 15-minute, 5-minute, maybe 30-minute to trade it to the upside within the small window. But we're not really there at this point in time. That monthly might continue to push down. So there's a lot of charts that are showing that they're quite close to their monthly levels from a weekly and monthly perspective. And the implication being that possibly that dollar might just decide to push through and just continue to weaken. I would ideally like to see it do retracements and then kind of move and then breathe in, breathe out, breathe in, breathe out. But it could just be one of those ones where it's really just gonna run for it. And that is a possibility, so I'm going to be prepared for that this week. So what does it mean when I say that? It means that on a lot of the pairs, I'm going to keep in mind that the possibility that there'll be a really nice retracement on the daily might not actually happen, and that it simply just continues to run in the direction. So in other words, that means that this chart could just continue to head down from here. Euro dollar could decide euro dollar has now done enough of a retracement and it's just going to break on through and push on to 1.23. So if that is the case, if the dollar does decide to do that, this week is going to provide some fast moving intraday opportunities, I think, certainly on lower time frames, but also maybe even on the 4-hour. And if that is the case, then it's going to just keep running. It's going to be this week will provide a lot of opportunities in that respect. So lastly, before I kind of wrap up, the charts that I quite like the look of involve predominantly GBP and Aussie pairs, maybe Kiwi pairs, and maybe JPY crosses. Okay, so dollar yen is junk, but the other JPY crosses are pretty good. So the other, or just, yeah, the other charts are potentially good. So let's have a look at your Aussie. Why I like that. Your Aussie has broken through, and this is where it looks the most obvious, kind of on that weekly basis, to see it break through that level of support. Looks very good. And so if that is the case and it's going to run free now, there's some good potential for it to head a lot lower. And so that could provide, again, any kind of pullbacks into that level of support around about that 1.6150 mark. Could be some good shorting opportunities throughout the rest of the week. So that's what I like. Looking pretty good there. That's on my watch list. And then there's a couple of the GBP pairs. So looking at, say, Pound Aussie, for similar reasons to the downside, very close to those monthly support levels. Pound Kiwi potentially. This was a really nice little pullback that we spoke about. I may have mentioned it in my weekly analysis. So that played out nicely. That's gone on. We've got, let's have a look at Pound CAD, sorry, just have a look at that as well. So GBP pairs are looking relatively weak and therefore might still offer some opportunities, but they are, as they approach these key levels, they are going to become more volatile and therefore higher risk to trade. Looking at some of the Aussie charts, I like some of the look of these, like Aussie CAD is looking nice and bullish. I wanted to break through that level and then take a, and then continue to run. And I'm guessing Amazon is delivering a package and the dogs are going nuts because that's the only thing that they love. Again, Australian dollar is struggling with a key monthly level there, potentially looking bullish. Until they break through that level, I don't think that it's a good idea to get involved in them from a trading perspective. Aussie yen is starting to really push through those levels. It's actually been a beautiful performance. This was one of my kind of trades that I was looking at last week. And so running through that, let's just have a look at some of the others, say Kiwi CAD or Kiwi Swissy. Also looking good. When I look at that monthly, we've got an uptrend there. That weekly is producing a nice little bullish candle. There is some potential, I think, in the Aussie and Kiwi pairs for moves. So in fact, I'm seeing more opportunities now than I think in the last 6 months, just on a general regular basis. And part of that, I think, is because that dollar started to move. And there could be other big things from a fundamental perspective that have just kind of finally, maybe now that we have a bit of a potential treatment for coronavirus coming out, that possibly things are just starting to loosen up a little bit, because I know that everybody's been working really hard. If anything, some people have been working harder during lockdown than prior to that. And I guess the whole point of this, the message, the lesson we're supposed to be learning here, part of that is meant to be improved life balance. But anyway, there you have it. And so that's it for me, focusing on most of those. Plan A being a continuation of the weakening US dollar, the possibility that it could just start running, compared with Plan B, meaning potentially we do get a bit of a retracement before it then decides to do that, watching key levels and not really participating in the market around high impact news. There we go. So I'm going to move on to have a look at the global commodities as well as the global indices. Thank you.